Welcome back. We are continuing with our earnings analysis, and now we focus on Union Bank of India. For the first quarter, the bank saw elevated write-offs which have aided bringing down their GNPAs. Also, their provisions, the overall provisions are up 40%, but NPA provisions are down. In fact, provisions are up 120% sequentially. To discuss more about the performance, we are now joined by Nitesh Ranjan, the Executive Director at Union Bank of India. Mr. Ranjan, good morning, and thank you very much indeed for your time. Well, let me start with the NPA, since that's something that's gone down significantly. Your guidance was actually 4%, and still at 4.54. When do you hit 4?
Yeah, good morning. So far as the NPA is concerned, we have given a guidance for the current financial year that by March 2025 will be below 4%. And in line with that, we have been able to bring down the gross NPA further to 4.5% for the quarter ended June. And we are very hopeful the kind of delinquency guidance we have, recovery pipeline that we have, that will be able to achieve our guidance of below 4% gross NPA by March 25.
Okay. But I must remind you that the Reserve Bank put out in June the financial stability report, and there the average for the whole country, banking sector, the GNPA is 2.8%. You're almost double that figure. So one would expect a faster reduction of NPAs. Do you hit 4 in the first half itself, or will it take the whole year? Will you go up until the fourth quarter?
Definitely, the endeavor would be to achieve below 4% well in advance of the guided timeline. But I also request you to appreciate the fact that if you look 2 years back, our gross NPA used to be over 10%. And from that high level, we have been able to bring it down to around 4.5%.
No, I agree. The whole sector was almost at 10%, if you remember. So all banks have had this problem, and one is only looking for a faster reduction. Your NPA provisions have gone down significantly, now at 1,600. Is there more scope for those provisioning to go down? I mean, for credit costs generally to come down.
Right. So credit cost last year was around 0.7. This first quarter also, we have been able to maintain at around 0.7. But I think it has the downside potential to go down further.
Okay. Your write-offs are fairly significant. Should we expect a similar number to continue?
I think write-offs, if you look at the average basis, whatever we have done in the last full year, compared to that, it's very low. And hopefully we'll be able to maintain the similar trend during the current financial year.
No, the reason I'm asking is that your restructured book is still big. Although it's coming down, it's come down 11%, it's still a nearly 12,000 crore book. So there is always this fear that there can be higher write-offs, but the advantage can be there can also be higher recoveries. Can you give us some guidance on recoveries?
Yeah, so for recovery this year, we have given a guidance of 16,000 crores of total recovery, of which in the first quarter, we have done close to 3,350 crores. And we are very hopeful that we will be able to achieve that target, given that we have around 41,000 crores of gross NPL on the book. And off the book, we have close to around 80,000 crores of written off accounts. So around 1.2 trillion of pool is there from where we have to do the recovery of 16,000 crores. Last year also, you'll note that we did a recovery of 18,500 crores. In fact, we surpassed our own guidance. So we are very hopeful and sanguine that this year also will be able to surpass the guidance of 16,000 crores of recovery.
Okay, no, that's very good to hear. Let me come to the other number also, which was extremely encouraging, that your slippages, the pace of slippages is falling. Can you give us an idea whether there is any stress at all? See, you know, in some of the banks, it looks like the fall of the NPA has bottomed out now. Even HDFC Bank reported a minor rise in GNPAs. Of course, it's seasonal. It's quarter one. Do you think you have more downsides? Or do you think that retail NPAs, for instance, can start rising?
No, we are not seeing any kind of trend, particularly in the retail, agri or MSME, that it is rising. If you look at even the quarterly incremental delinquency, even in agri and the MSME segment, it is close to around 2.5% only incremental delinquency, which shows that the asset quality at the current level is quite good. And the total slippage guidance we have given for the full year is 11,500 crore around. And we have been able to maintain on an average basis, if you look at Q1, around 2,300 crores. So that's quite possible that we'll be able to contain these slippages within the guidance level of 11,500 crores.
Okay.
We do not
Opex has
see
fallen.
any kind
Oh,
of
sorry.
signs of stress in the retail segment particularly.
Got it. That's good to hear. Your Opex fell. Scope to fall further? I mean,
See,
fell quarter on
Opex, we have
quarter.
always been guiding that the growth rate of Opex will be in the range of 8 to 10%. This quarter, it has shown 10% YOI. So going forward, one can factor in 8 to 10% growth
Fair
rate.
enough.
And therefore, yeah.
Okay, got that. Just wanted to know about your non-NPA provisioning. That is high. Is there a chance that that can taper off?
Yeah, that will taper off. There was some one-off provisioning that we have made during the current quarter, but going forward, that should taper off and it should normalize.
Okay, just one word on margins. What do you expect it to be better, or do you think deposit cost is really hitting you? Anyway, first that number also. How much may your cost of funds go up in the current quarter, and therefore margins?
So if you look at 12-month basis, cost of funds have almost gone by 40 basis point. So a lot of repricing has already happened. But over the next 2-3 quarters, some maybe 15-20 basis point inch up in cost of funds might happen, given the deposit repricing that we are seeing in the market. But given all these, we have given a guidance of NIM for the full year in the range of 2.8 to 3%. We are making our best efforts to ensure that we contain and we maintain our NIM in the upper range of this guidance, close to 3%. This quarter, we have been able to achieve that, and our endeavor would be to maintain it above 3%.
All the very best for that. Thank you very much, Mr. Ranjan, for joining us, and hope you have a great FY25. Okay, so that's the word from Union Bank, and the stock, as you can see, up 1.5%. Well-received numbers, especially the ROA of 1%. We have to take a break on that note, but now we have a lot more results to analyze. HDFC Bank, Kotak Bank, and a whole host of mid-cap banks, RBL, Yes Bank. So many have come recently. Shantanu Chakrabarti, India analyst of BFSI at BNP Paribas, joins in a minute after this break.